All right, if you're anything like me, you've probably scoured the internet looking for different strategies to use in the futures market. You've probably tried a ton of them, whether that's support and resistance, whether that's supply and demand, whether that's trend line, whether that's different patterns. And some of them may have worked for you, some of them may have not. For me, although I've had success with some of them and even have videos showing how I take certain trades, what I typically found with most of them was I didn't like the amount of risk that I was required to take in order to take those trades. For example, supply and demand ended up with huge supply or demand zones that I felt like I had to have my stop all the way at the base or the top of, and it just left me exposed with way too much risk. Or I had to scale down to one micro, and so then your winners ended up with not much of a win. And so I started my journey again looking for another strategy, and I kind of merged some things that I learned over the years. So I started with penny stocks, stock trading, doing some stuff with options and Robinhood. Went from there to Forex, went from there to futures. Okay, so kind of been on this journey over time, and I've picked up things here and there. And so it kind of plays in my favor that I went through those years of unfortunately losing money in those markets, because I picked up different pieces of trading and just seeing things that have now, I feel like, started to play their part in my trading journey. And so I'm going to share kind of what I've started doing now with trading. And it's not because I want you to copy me. They don't always win. I lose trades all the time. However, I know that if you're looking for something, this may be the thing that works for you as well. And again, like I said, it lets me limit my risk and still have good wins. And so let's hop over in the chart. We'll take a look at it. So here we're going to look at a 1 minute chart. This is micro silver. Okay. So what we're seeing here is a defined uptrend. Now I normally will start my day by looking at the 4-hour or the daily, or sometimes even the 1 hour, to try and get a bigger picture of what is the market doing. And if we are in an uptrend, I'm only going to take longs. Okay. I'm not gonna be trying to short the market if we're in a uptrend. There is plenty of room to do that. If you've got a good strategy, go for it. If you can manage your risk, it's all fair game. Okay. But what I'm doing, only taking longs if we are in an uptrend on the higher time frame. So once I've defined that, which here we are in an uptrend, I will want to catch these pullbacks. Okay, so I'm looking for these pullbacks here. You can see we have 1, 2, 3 here, and we just continue higher. You might even count this 4. And so what I'm looking for is a way to figure out where is the bottom, or as close to the bottom as possible, of these pullbacks. And so what I have found is 2 ways here. You see two things on my chart, and that's it. Okay, I've got the blue line that we have here, which is the 21 EMA, and I have this white line, which is the 200 EMA. Okay, so I'm mainly going to focus on the 21 EMA on this video. Maybe we'll get into the 200 at a different time. I use it very small percentage of the time. So what I'm doing is I will find, previous, if I just hopped into the chart, I'm going to look now to find in all of my pullbacks when we are going long, where are the bottoms touching? And what I want to find is the time frame where the bottoms are touching or are rejecting off of the 21 EMA. So as you can see here on the 1 minute chart, we are blowing through the 21 EMA when we pull back. So this is not it. So we're going to go to the 2 minute and we're going to look, and you can see this is a whole lot better, right? We are bouncing off of it, but in my opinion, we are kind of going through it a little too much, and I don't like that. So I'll go up one more. We'll go to 3 minute. This is more where I like to be. Okay, so we're coming back. We're not quite touching it, but we are very clearly rejecting off of this line. And so now what I'm gonna do, well, let's just look. If we go up one more, so trading view inside of top step, I can only go from 3 to 5. You can't go to 4 minutes. There's just way too much space here, right? It's too much space. So 3 minutes was the sweet spot. So now what I'm gonna do is when we have this pullback, so I get a blue candle, which in my case, I'm using blue instead of red and I'm using white instead of green. This is a psychological thing that I found really helped my trading, is if I removed red especially, the emotions weren't as strong if we started going in the wrong direction. If I was long and we started seeing red candles, it brings emotions in, and sometimes emotions, if not all the time, are kind of bad in trading because you need to keep them under control so that you can make wise decisions. And so looking for ways to eliminate some of that, one of those was getting rid of red candles, and it has helped, so maybe try it out. So what I'm going to do here is, as this pulls back and we come down and we reject off of this blue line, it could touch it, it might even go through it a tiny bit. What's most important is how does it close? So even if it came all the way down here and it came all the way up and it closes, the second it closes above that 21 EMA, I'm going to enter the trade. Now, in this scenario, I've been using 2 micros, okay? Just 2 micros of silver, which you'd be shocked with how much leverage that still is with micros. Silver is a bad, bad, bad man. Okay, so this pulls back, it closes, we would enter. Now, taking profit is a personal preference. Maybe you like to set a defined dollar amount and that would be fine. Maybe you're trying to make 500 bucks no matter how much you're risking. In this case, 2 micros from the close of this blue candle to the low of this blue candle is only about $210, okay? So there's even room. I won't risk more than $500 on a trade. So if I thought this was an A+ setup, I could go up on my contracts and this would be a massive winner, okay? But even with $210 in risk, which again was my whole journey, was trying to find a way to get winning trades that have less risk. And this is what I've come up with, is $210 worth of risk. If you somehow managed to find the top here of this, well, you're now looking at probably a good almost $2,000 right there with just 2 micros. Because what I typically will look for, if I'm not quite sure how much longer this uptrend is going to go, it doesn't feel like it's a super strong uptrend, then what I will do is I will exit after a second blue candle in a row closes. So in that case, would have been right here. And this right here would have been $1,200 worth of profit, okay? So you can imagine if we would have made it up to here, that's probably at least $800 to $1,000 more, okay? So either way, that's the safe play is, hey, after 2 blue candles in a row, we're out. If you really wanted to try and just take it as far as it could go, you could wait until a blue candle closes below the 21 EMA. However, what I have found is, unless you're just in a really strong, one of those days that just all day long we go up, then you're most likely gonna not lose money, but lose a lot of your profits by trading that way. So let's just say you were just trying to make $400 or $500 a trade. Well, as this came and right here, it pulls back and you enter, you probably have $400 just in this first candle, if not halfway up this second one, okay? And that's before you even got to the top of this last high, right? And you're assuming if you're in an uptrend, you're gonna have higher lows and higher highs. So this is gonna come down, and now we're assuming, again, if we're in an uptrend, we're going to surpass this high. So it is safe in this instance to target these highs. So that is another way you could do that. Either way, that would have been, right at the highs, you're almost to the low of this blue candle here, which was 1,200. So you're somewhere between $1,000 and $1,200 right there. Now, look here, it pulls back again bounces off of this 21 EMA. Now you enter again, same concept. I wait for this 3-minute candle to close. So now it's all the way up here. This is a little bit more risk. But if I truly believe we're in this uptrend, and if I just saw a candle come down and reject this 21 EMA and it now turns from blue to white on me, it's a good sign anyways. This is a bull hammer candle right here. So I would enter at the top of this, my risk would be down here. And again, same thing, right? You could take this all the way up here to second blue candle. Again, that's probably even way more profit than this first one. Again, then we pull back. Now this is a little different here. I would normally say if it closes below the 21 EMA, I stay away from it and I wait until we get back above the 21 EMA again. However, if we're this close where it's like, are we on it? We're slightly below it? I don't know. Then what I will do is instead of entering as soon as this closes, because we are right on it and I don't want to enter and then we just dump, and there's also just no room for risk there, is one of two things. If I have made tons of profit and I'm okay risking some more money, then I will find the nearest low, which would be this blue candle, and I'd put my risk right here and I would take the same trade, right? I would just enter as soon as the candle closed and be okay with a loss. And that's a fair way to trade, okay? Or the safer trade is if this closes at or slightly below this 21 EMA, then I will set a limit order, a stop limit order to buy right at the top, at the high of this blue candle after it closes. And then now if price turns and comes back up, and so we truly did bounce off of this 21 EMA, then I'm in the trade. And then again, following the same exact thing, you could have rode this all the way up until market closed, right? Now again, this was at the end of the day. I'm not normally even trading any of this, but I just saw this was such a perfect example. But you could literally do this all day long. So we had some chop here in the middle of the day, which I also don't trade. But look, we come, we bounce, we come, we bounce, we bounce, we bounce, we bounce, right? Over and over and over again. You could literally do this all day. Could have done it all morning. Now, again, different days are different. So you may hop into a day and the 3-minute time frame we're blowing through that 21 EMA. Maybe we're way above it. And that's where you can just scale up or down. So if we are way above the 21 EMA on pullbacks, then you need to go to a lower time frame. So you could go from 3 minutes to 2 minutes to 1 minute to 30 seconds to 15 seconds. Like you can keep going down and you'll eventually get to a spot where all of your pullbacks are pretty evenly coming down to that 21 EMA. And then the opposite is true. If you need to go up on your time frame, you could do that as well. So that is also, since I'm mentioning it, something that I will do if I don't have a lot of time to trade is I can go up to the 15-minute time frame, and I probably won't be able to find a good example, but yeah. Let's see. This would have been the end of the day though, so that wouldn't work. But as you can see, it does. You can find places where we will sort of bounce off of said 15 EMA, like here. I guess this could have worked. This was like 9 in the morning. Yeah, that would have been good actually. We came up above it, we came down, so I could have entered right there. That would have been my risk. And then you could have walked away from the computer and been okay with that loss, and you would have come back later, whenever in the day and had massive profit. Obviously with prop firms and trading in this way, you can't leave things running through the different markets from morning to evening, but you can if you start right when evening session starts all the way through the whole next day. So there is a way to somewhat kind of swing trade versus day trade with this strategy as well, and I have done it and it does work fairly well, but you are going to have less frequency that it comes down and taps that 21 EMA. So anyways, I hope that this makes sense to you. I hope it's something that you can try in your trading. Again, be responsible. Don't use minis on this and just have a ton of risk. I mean, you can if you're feeling confident and you've got the account for it, but I recommend the whole point of this was to limit your risk and still have really good winners. And this strategy right here can do that for you like it's done for me.